Hi guys, this is the memo video of task 10.9. It says the following balances appear in the trial balance of Ramba Traders on 28 February 2008. We've got vehicles with a cost price of 340,000, equipment with a cost price of 200,000, and we've got accumulated depreciation on equipment of 38,000 Rand. Now this accumulated depreciation is still for the previous years. Remember, we have to do the depreciation adjustment for this year now as a year-end adjustment. Okay, so this accumulated depreciation represents the value that the equipment has lost in all of the years before this financial year. I remember last year the Form 3s got confused. They thought that this accumulated depreciation value in the trial balance already includes this year's depreciation. Okay, so don't get confused. We still need to use this to calculate this year's depreciation. Okay, then they say Ramba Traders bought the equipment 2 years ago. That explains why it already has accumulated depreciation. They bought the vehicles halfway through the current financial year. Now that's very important, and you will see that the calculation is adjusted because now they won't depreciate for a full 12 months. They bought it in August 2007, so the vehicles will only depreciate for September, October, November, December, January, and February, which, if you count those, are 6 months. Okay, so you'll see the calculation is adjusted for 6 out of the 12 months and not for a full financial year. Then they say depreciation is written off as follows: vehicles 25% per annum on the straight line or the cost price method, and then equipment is 15% per annum on the diminishing balance method. It doesn't affect the recording and the posting. It's still the same as 10.8. It just affects the calculation. Okay, so if we go and look at it, in the general journal, let me just get this in focus. In the general journal, we will still only issue one journal voucher on the last day of the year, which will be 28 February 2008. Remember, the general journal rule is that depreciation is our collective debit, okay, and we always write the account debited first, and it touches this line here. Depreciation is an expense, which is in the nominal section. Then the account that will be credited for the depreciation of vehicles is a contra asset account called accumulated depreciation on vehicles. Remember that the account that's credited is always like written a little bit towards the right. Shouldn't touch the line. This is the balance sheet section account. Remember, we don't credit vehicles directly because of the historical cost principle. And now when you calculate depreciation, remember to adjust it for 6 out of the 12 months. Then you write that 42,500 in the credit column. You don't write anything in debtors control or creditors control because depreciation has nothing to do with our debtors or our creditors. Then equipment, the depreciation for equipment goes to accumulated depreciation on equipment, which is also a balance sheet section account. It's on the diminishing balance method, so remember now we don't use the cost price of the equipment. Okay, that's why they gave us the cost price and the accumulated depreciation. So you'll use these two values to determine the carrying value, and then you will calculate depreciation on the carrying value like this. And then it gives you 24,300 Rand. Okay, now the total value that depreciation is debited with is then these two added together. Okay, so you write 66,800. Remember, this is the way that we will always record depreciation for a business in the general journal. Okay, so you won't have two separate journal vouchers, one for vehicles, one for equipment. You will have one, and you will write the total value in the debit column for depreciation, but you will split the two credits. And then remember your journal narration, which is now a little bit longer because the two assets that we have two different depreciation methods. So you have to write the asset class, the depreciation method, and the percentage. Okay, so depreciation is written off at 25% on vehicles on the cost price or straight line method, and 15% on equipment on diminishing balance method. And you have to write everything in order to get your mark. Now, if we look at the general ledger, let's go and record the things that we had at the beginning of the financial year first. So when this year started, 1 March 2007, we already had equipment because we bought it 2 years ago. Okay, so it's a balance that we brought down from the previous year. And there was already accumulated depreciation on equipment from the previous years. Okay, so this is also an opening balance. Be careful, vehicles was only bought at the end of August. Okay, so vehicles was bought at the end of August 2007. They didn't say if we bought it with cash or on credit, so we just assume it's cash. Bank CPJ, 340,000 Rand. Okay, then if we go and post the depreciation transactions that we just made in the general journal, we will do it like this. Remember, in the ledger we split the two, so let's deal with vehicles first. We'll go to the debit side of our depreciation expense. The contra account will be accumulated depreciation on vehicles. It happened in the general journal. The value was 42,500. Okay, so this must go to the credit side of accumulated depreciation on vehicles. At the end of the year, the contra account is depreciation. And you will see I highlighted them in blue because you can nicely see that this is the credit leg and this is the debit leg. Then you do the accumulated, then you do the depreciation for equipment. The contra account will be accumulated depreciation on equipment. The reason why we split them in the ledger is because they've got two separate contra accounts. General journal, 24,300, which brings our total depreciation to 66,800. And then the credit leg of this transaction will be in accumulated depreciation on equipment. Now it's a new year and month, so write that in there. 28th, depreciation is the contra account. General journal, 24,300, and I made them green so that you can see that this is the credit leg and this is the debit leg. And then our accumulated depreciation on equipment is now at the end of this year 62,300, which means our equipment has lost a total of 62,300 Rand from the time that we've bought it. Okay, then they asked you to show the effect on the accounting equation only for the depreciation. So we will work with this value, the total depreciation value, 66,800. Our assets of the business decreased in value. Okay, so even though we didn't write it here in the vehicles and in the equipment accounts, we created contra assets, in other words, negative assets. So our assets actually decreased with a total of 42,500 plus 24,300, which is 66,800. Our owner's equity, expenses increased, and if expenses gets more, owner's equity decreased, also is 66,800. Nothing happened to our liabilities.